in response to some of the things that Kristen said, I think it might be helpful to people who are faint of heart. You're certainly up against strong opposition. I think it might be helpful to remember this. Amateurs built the ark. Experts built the Titanic. Okay. The good news is that we already own a public bank. It's our central bank. It's called the Bank of Canada. We're all shareholders, and it's held for us in trust by our government, but it's also ours by law. The bad news is that we've been robbed. The money system has been privatized, and the money supply has been monopolized. Now, banks, of course, are all about money. And to appreciate the possibility and the potential of public banking systems, it's essential to understand something about the true nature of money. I grew up in the Depression, and one of the first things I had drummed into me about money was, money doesn't grow on trees, you know. Well, it was some decades later before I discovered that it's even easier than that. That money is created out of nothing. John Kenneth Galbraith, eminent economist, said the process by which money is created is so simple that it repels the mind. You can't believe it. And that's a big part of our problem. People can't believe it. This was confirmed, however, as the truth by none other than Graham Towers, who was our first governor of the Bank of Canada. He was meeting before a Parliament Banking and Commerce Committee, and he acknowledged these things. This is from the first governor of the Bank of Canada. 1, banks create money. They don't lend their depositors money. They create money. He said, just the way steel plants create steel, banks create money. The second thing he said was that how this works is that really it's a matter of bookkeeping entries against which people draw checks. Then he affirmed, and this is the core of our message, he affirmed, anything physically possible, that is, the materials are there to build it, the human resources are there to do the building, anything physically possible and desirable can be made financially possible, period. Okay. Thank you, Daryl. About money, the nature of money. It's not a commodity. You can't eat it, you can't sell it, you can't drink it, and it sure isn't much of value in terms of an air purifier. So you can't do anything with it. Its value rests entirely in the value attributed to it by the authority responsible for producing it. Today, most of it's intangible. It's credit. It's intangible, and yet it's very, very real. It's very important. Money's a creature of law. It's not something that you have to dig out of the ground that's natural. It's something that we created. It's a creature of law. Its function as a unit of value depends entirely on what is ascribed to it by the authority responsible for it. It can be used to create or acquire wealth, but money is not wealth, and it should not be confused with wealth. It's a tool. It's a tool designed for facilitating the exchange of goods and services that we need to do in order to function as a society. Money is not the problem. It's a great invention. John Hodgson the late Dr. John Hodgson used to say, right up there with the wheel and fire. It was a great invention. The problem is that its creation and distribution have fallen into the wrong hands. The struggle over who should control a nation's money system goes way back, and the connection between monetary authority and freedom has been often very clearly recognized. Thomas Jefferson, for example, said that he feared banking institutions with the power to issue money and found them more dangerous to liberty than standing armies. As early as 1925, J.S. Wordsworth called for a nationalized system of banking and government control over the issue of currency and credit. The money supply should be managed in the national interest rather than for private profit. And in this, he said, we face the larger question of whether Parliament is to be sovereign, of whether the people are to be sovereign, or whether liberties have already been filched from us without our even knowing it. The Great Depression educated the Canadian public to the realities of money and banks in a way that would stand us in good stead today. The public level of consciousness about banks was incredibly superior to what it is today. In 1933, the Bennett government created a Royal Commission on Banking. G.G. McGeer should be in our history books as one of our heroes. I doubt, how many of you have ever heard of G.G. McGeer? Good for you. Well, G.G. McGeer was very, very instrumental, of course, in the establishment and the privatization, or in the nationalization of our central bank. He appeared before this commission, and he outlined a plan for Canada, and its title was The Conquest of Poverty. He said, the prerogative of government should be used for the common good, not individual private profit. The bank, of course, went through, but there were two issues still that kept, if you read the early history of the bank, still two issues that created a lot of controversy and confusion. They were, one, should it be public or should it be private? And two, who is the supreme authority, the government or the bank? The Constitution gives Ottawa exclusive power over money, banking, and paper currency. Article 14.2 of the Bank of Canada Act established that in the case of a difference of opinion between the government and the bank must yield to the government. So the mandate of the bank is to regulate credit and currency in the best interests of the nation. In a radio broadcast, Mackenzie King at the time said to the Canadian people, once a nation parts with control over its currency and credit, it matters not who makes that nation's laws. Usury will wreck any nation. Until the control over its currency and credit is restored to the government and recognized as its most conspicuous and sacred responsibility, all talk of the sovereignty of Parliament and of freedom is idle and futile. The Bank of Canada in 1938 was nationalized. All the private shares were bought by the government, and in Canada for a time, the question of who should create the money seemed to have been settled. They were to share it. Private banks and the Bank of Canada were to share it. Excuse me. In 1938, the bank was privatized, and the Bank of Canada demonstrated the validity of Lincoln's comment that the privilege of creating and issuing the nation's money was not just the prerogative of government, but it was its most creative opportunity. The Bank of Canada funded infrastructure projects like the Trans-Canada Highway, the St. Lawrence Seaway, and social projects like old age pension and Medicare. And they did all that without undue inflation or debt. In 1974, Canada joined the Basel Committee of the Bank for International Settlements. That committee endorsed a policy of governments not borrowing from their own central banks, but borrowing instead at compound interest, of course, from private banks. By 2012, Canadians had paid over $1 trillion in interest on that account, twice its national debt, greater than the cost of health care, greater than the cost of seniors' entitlements, greater than any other single thing. Interest, $1.1 trillion just in interest. The banks get the profit, we get something called austerity. The 2012 budget, Canadian budget, did this. It chopped 19,200 jobs from the public sector. Federal programs were slashed by $5.2 billion a year. And this was all justified by an unnecessary debt, a deliberate debt. Money matters. It's the lifeblood of the economy. Too little and the system collapses. Too much and it loses its value, and again, the system fails. How money is created and distributed also matters. Basically, there are two kinds of money: government-created money and bank-created money. The most important distinction between the two is that only the government can create legal tender, essentially debt-free money, cash or credit. What the private banks create is sometimes called promise-to-pay money, because essentially what they do is that they substitute their promise to pay, which is accepted as money, for your promise to pay, which is not. Other differences, as I say, are outlined in the leaflet. Money is created when the bank issues a loan, and it's destroyed when that loan is paid. You pay it back, so the money supply is instant. Every time you pay it back, money disappears from the system. So the money system and the money supply is always in flux, and this is a cause of instability that's a real problem with that system. Most money today exists as debt. The debt grows faster than income because we have so many ways of creating debt, but income's harder to come by. When the debt so exceeds the income that debtors are unwilling or unable to pay and cannot borrow more, then even they may not simply be able to keep up the interest payments. Then banks grow unwilling to lend, and the instability then is devastating because we don't have enough money in the economy to keep it going. There are all kinds of other flaws in the system, and one of its characteristics, of course, is the boom-bust that we're all so familiar with. You have a boom, bang, you have a bust. And these booms and busts have become more frequent and more disastrous over the last few years. A more serious problem with the debt money system is really now catching up with us. Since approximately 97% of today's money supply is debt money, the only way to expand the supply is to increase the debt And this makes growth an imperative. The system has to either grow or die. The weakness of our present system, since the exploitation of which now is threatening the very life of the planet on which we live. As Naomi Klein argues so well, this changes everything. As she points out, our economic system and our planetary system are at war. What the climate needs to avoid collapse is a contraction in our use of resources. What our economic system demands is unfettered expansion. And financially, economist Michael Hudson has, in a recent article, explained that, I'm getting the word. In the recent article, he explained we've gone as far as we can go in fueling the economy with debt. Over the past 3 or 4 years, successive Canadian governments have abdicated their responsibilities under the Constitution and the Bank of Canada Act and surrendered our central bank to the moneylenders. We must regain control of our currency and credit. To this end, COMER has filed suit in the federal court, and Rocco Galati will be here later this afternoon to discuss the matter. I'm going to skip to what I think is very important context for us to understand at the moment. Einstein said we can't expect to solve our problems at the same level at which we created them. And this idea about the need to rise to a new level of thinking is being expressed often and by all kinds of people. So, for example, what are the sorts of things that we need to rethink? We need to rethink, for example, money. Money belongs to us. We own it. We invented it. We can change it. It's a commons, and we all have a right to it. The government is, the recovery of that is up to us. It is ours to take back. Remember, again, this essential truth. Anything that is physically possible and desirable can be made financially possible. What we cannot do is to trash the planet to keep that system going. What we cannot do is to trash our young people, which we're also doing in the interest of this system. Tax. Fiscal policy is only one of 2 main tools that the government has to manage the economy. The most important one is monetary policy, which we never hear of because it's a taboo subject. Like Voldemort in Harry Potter, you just don't mention it. The monetary policy controls the creation and distribution of money. And Joseph Stiglitz, eminent economist, has said the monetary policy is the key determinant of the success of your economic system. And we don't talk about it. Unions won't talk about it. Nobody will talk about it. And 20 years ago, COMER was the only voice in the wilderness talking about the need for monetary and economic reform. What is work? What is so ennobling and wonderful about work that we should spend our lives learning how to earn a living, and then, if you're lucky, working to earn a living? We need to rethink work, particularly since work is disappearing to a great extent because of the development of our technology. Let's put life before work. Why work most of your life and devote your life to work? Life has to be more than that. How about a shorter work week, shorter days? Debt. Particularly, the most outstanding example of the immorality, the unthinkable, outrageous effect of this system is our student debt. We have done terrible things to our students. They are graduating debt slaves. When I went to university, I went for 5 years, and when I graduated, I didn't owe a cent. And that's the way it was, and that's the way it can be, and that's the way it should be. When the University of Toronto has to establish a service for students who are seriously considering suicide, that is a smoking gun. That is absolutely an indictment against us. How could we ever have allowed this to happen? I don't have time to do what to go on with what I would like us to have a chance to discuss. We'll have to do that again another time. But I would like to suggest that what we're about is not revolution. What we're about is evolution.